You got a lot of industries in here that reflect the weather effect. Despite the polar vortex today, the earlier part of January was warm. So you see big increases in construction, big increases in leisure and hospitality. That reflects a little bit of a weather effect. Beyond that, obviously, this is a very strong report. And, you balance it out with the revisions to December. But clearly, I think you're seeing a little bit of a weather effect in terms of the payroll headline number.
Rick, I mean, we saw December. You were higher than the average for January, but do they offset one another? If it had been back-to-back 300s, I would have been like, wow, but it's not. It's good, though.
Yeah, no, believe me, that's a huge revision, 312 down to 222,000. So if you combine it, I guess I won over both weeks, but who's counting? I don't know. Here's what jumps out at me. What jumps out at me is that 63.2 labor force participation rate. It keeps going up. That is such good news, even though it distorts things like U6. And the other thing is hourly was up 1/10 on wages, earnings. That was, a bit light. But I really like the year over year hanging very tough, another 3.2. I don't know. I look at this report, even seeing the revision, lump it all together. The areas I'm most interested in are holding much steadier than the very stochastic non-farm payrolls.
Leisman, there was horror on your face when you saw the original 300. You seemed a little bit more relieved when they revised December down.
If I could correct, there was no horror on my face.
Okay, all right. It's just
what horror?
Shock.
No, there are days that
disappointment.
there have been days. Why
gnashing
disappointment?
of teeth. That, you know why?
No,
We're not getting you change. Just ignore it. Just go ahead.
Okay, just ignore you. Okay, great. That's a good idea.
Good advice.
Yeah, good advice, right? So here's a couple things real quick. There are some times that I wish it was the BLS that shut down and not other parts of the government here, so we wouldn't have to deal with this data. Let me tell you that the 95% confidence level for this data is plus or minus 100,000, and sometimes we get up to that 95% confidence level where it is plus or minus. The interesting thing and the good thing about this is you can ignore the 100,000 reduction in December, and you can say, you know what? The job market is still very, very strong. Right? Because 222 or 312, they're both 100,000 or 200,000 above what should be the run rate of the economy. So I don't really care from an overall standpoint that the number is lower, because it's not from 200 down to below 100. It's 300 down to 200, which is still a very strong number. Rick is right. I just checked, by the way, the best participation rate since September 2013. So people continue to come into the workforce. They didn't all get jobs this month, which is why the unemployment rate went up. And I just got to close with this thing. What happened to the recession about which the market was so certain? Jobs can be coincident. They're not necessarily lagging. They're not necessarily leading. But it's very hard to see all that much weakness and that certain recession that everybody was sure was coming in these jobs numbers. Maybe it happens.
Let's get Austin's take on this. Austin?
Look, I agree with Steve. That doesn't look like a recession. B, I don't understand what happened. How could you have a minus 90,000 revision? What did they miscount?
Hey,
so
Austin,
I
real
wonder
quick.
what that is.
Austin, real quick. What we do know about the December number, it was a very low participation from establishments. The number of responses
so maybe it was a
in the payroll. I don't know if that's it, but we do know that about December.
I think this number being as big as it is, when the GDP growth contributors are modest, it probably means that we're going to get some bad productivity numbers again, because why would the jobs numbers be growing so much faster than the overall economy is growing? I don't
Victoria?
Productivity was bad. Rising wages would be pushing into inflation. Disagree there, Austin.
Yeah,
look,
I agree with you. I think that's the strongest thing we got going.
Austin agrees with you, Rick.
I agree with Rick. I don't know if it's too cold out here or what happened.
Your mind is, I don't know. Victoria, and then David.
I think that's the question that we have to look at is now, where are we going to lead with these average hourly earnings, right? Historically, over 4% has led to quite a bit of inflation. I know we talked earlier and that Phillips curve is a little bit broken, but I still think now we're 6 months over 3% year over year with this number. We haven't seen that since 2009. So I think we might see some inflation, and the concern is going to be with the average now at what I think Elon said 240,000 jobs. Is good news going to be bad news? Are we back to that with the Fed? Is this going to be a strong enough number where people start getting concerned again that now the Fed has a little bit of ammunition that they could raise rates in June or later in the year? I think that's something that Bullard will address, and I'm interested to hear what he has to say on that.
We're looking forward to that. David, should we fear prosperity again? Are we back to that? Or if there's no inflation, why shouldn't we be happy if there's no inflation?
We should be happy. I'm not worried about inflation in these numbers. What you're seeing here is finally, after decades of stagnant wage growth, a healthy, robust economy growing at 3.5%, and it's being spread all around. The wages are increasing at a decent rate and a healthy rate, one that's very good for us. I think what this data shows is the private sector has remained robust, even as the government is Twitter-pated with the shutdown. The unemployment numbers reflect the noise in that. That'll go away when people get back to their desks next month. So I think all of this is a very good indicator. If the president keeps on course to get a trade deal with China and the Fed maintains as steady as it goes, we're going to see 2019 being a very good year for growth.